All right, good morning. Welcome back, rhinos. Let's have some fun today. Let's see where we're at. So don't mind me. And I apologize for my 15 seconds tardiness. I say that because I actually am counting in my head and I'm like, oh my God, I'm behind because I've been doing that much today. But I also apologize because I expect the same of you. So we can, agree that there is times things start and we get there when they start. Cool. We'll give everyone a minute. What is showing? Already have pretty much of a packed house, which is totally cool. So let's give everyone a second. For those at home keeping score, this actually is Voss water. Very new. So I do spoil myself with a new bottle of water once a month because I read that if you keep drinking water out of the same plastic container, you're probably going to have some type of poisoning, which makes sense, right? Last I checked in biology, it wasn't good to drink plastic. Hey, Frida. Okay. So let's go over a couple of things first, right? So hey, Justin. So the email I sent out this morning said that this is going to be the last week to register for RHINO Wealth. And the reason that is because, so RHINO is a much bigger project, right? Like we're actually building our own search engine right now. And there's a whole lot of components to it. But the general gist of it is that there is no small business search engine in existence. Therefore, if we can be the first one, there's a lot of good that goes with it. We believe people, if given the option, would support small business over big business. And we believe that if people can go ahead and have the option to support small business while simultaneously have the option to participate in small business, then the overall population, which has been so taken advantage of, the bottom 99%, can effectively leave Wall Street and go ahead and patronize themselves, right? So say, for instance, Walmart, every customer left Walmart. Do you think they would just stop buying stuff? No, they would buy stuff from other places. Now, all the things in Walmart is what? Like your shirts, your pencils, your this, your that. Could that population that left Walmart go ahead and create those products themselves? They're all drop shipping it from the same place. Walmart is essentially just the biggest drop shipper ever, right? Could one customer of Walmart make t-shirts? Can one customer of Walmart make pencils? Can one customer of Walmart do this? And if they could do that, and they had the option to buy within themselves, what would happen to each one of those people? They'd go from customers and employees to very successful small business owners. Walmart would go bankrupt, and this population would have the greatest renaissance of small business ever. Welcome to RHINO, right? In doing so, we go ahead and try to offer as much value as we could to everyone for every different niche. RHINO Wealth is something that's near and dear to my heart. I spent a lot of years on Wall Street, and I spent a long enough time to know that I just despise them. In fact, we had somebody that was mentioning, oh, listen, I have a Wall Street friend that might be able to help you. And I said, I'm sure he's great, but no, right? And I know who these people are. And I'm sure some of them are great fathers and great husbands and great this and great that. Not interested. The point of what I'm trying to get at is RHINO Wealth was a way that we can go ahead and reach out to an audience that did not understand who RHINO was, nor care to understand or learn who RHINO was. But they did want to go ahead and make money. Hey, listen, I see what you're doing over there. Don't really care, but I see that you can make a ton of money. You're making 40% left and right, and you actually sound like you know what you're talking about. So this I'd like to participate in. It is in that person participating in this program that then says, well, this is Anthony, this is RHINO. I kind of like him, right? Like he's there every single day. He's never late. If he's 15 seconds late, he says he's 15 seconds late. He apologizes, he's accountable. And he's actually impressive, right? Like he's not just making this up. Like I'm making money by being a part of this. Therefore, if he can do this, maybe I'll go ahead and take a second and take a look at that. And it's also called a law of reciprocity. There's a reason we don't charge anyone for anything. There's an overall ethical reason that we just don't believe that we should. I believe that if we're successful in what we're trying to do, then that will be worth more than anything we can charge you today, right? Like that's an ethical, goal-oriented reason. But there is a smaller reason that fits into marketing. I don't want to charge you for anything because I want you to go ahead and identify us as, you know what, I owe them, right? Oh, and you're making us owe you something? Yeah, your time. Remember when President Trump would go out there and when he was campaigning, he would do this, this, and this, and the media couldn't understand how crazy he was. He says crazy things, blah, blah, blah. He's just an entertainer. Yeah, well, you know what? Those people that went to his rallies and were entertained by him, you know what they said on election day? This guy works harder than anyone I know. He's doing campaign after campaign after campaign. I'm watching him on TV and I'm entertained. I go to news. I'm at work and people are talking about him. You know what? I can at least go out and vote for him. He's kept me entertained for so many years. There was a percentage of people that voted for Trump that had nothing to do with politics. They were simply saying, thank you for keeping me entertained in this world of zero entertainment, right? The point being, if we can go ahead and offer you anything, whether it's entertainment, whether it's performance, whether it's accountability, whether it's anything, at some point when we have an ask of you, you have to be a real dirtbag to say, you know what, I'm going to take from you and give you nothing back. And if you are that person, God bless. Like, I didn't invent you. You are that person because other people made you that way. And I'm okay with that. I know there's going to be certain people like that. I used to bartend for a little bit when I was helping GM a restaurant. I remember one of my barmaids had gotten a really poor tip from someone that they thought they gave extra service to. And they got so mad and it was frustrating them all day. And they go, Anthony. And I said, listen, if you're going to judge your success by one person, you're out of your mind. If you do the right thing and do the right thing to everyone equally, if it is the right thing, then the majority are going to treat you back the right way. Therefore, if you're never going to win all the people. If you could win X amount of the people, well, then you did a good job. You can't win everyone, so let the other ones go. I'll tell you, since we opened up RHINO and took our initial investment 4 years ago, our initial investors was 10. All 10 of them are still with us. We then reopened RHINO to a secondary group of investors on a global basis, some of which are in this chat or in this right now. Then we opened it for 60 or 50 additional people, so 60 altogether. Of the 50 people that did ask for us to call them, every single one of them participated on some level, which is actually quite impressive in its own right, because I was a stranger to people. They just heard me over the phone and said, you know what, we believe he's onto something. And you know what, we'd like to go ahead and send him some money and invest in RHINO. And they're equity holders in RHINO. What they'll tell you is every single month they've gotten a commentary from the company. Every single month they've got a 1% dividend check. Every single month they've had a compound account statement. Every single month that they've never not been able to get a hold of me. Now, has all of them stayed with us? No. There's been some that have said, okay, yeah, listen, I really appreciate what you're doing, but I need the money to send my daughter to college, right? Or I need this, I need that. And every single one that will tell you, Anthony, wired them the money the next day, if not day of, right? The point being, we're not going to be able to go ahead and win everybody or catch everyone at the best part of their life. But the goal is that if we could go ahead and provide enough value and enough content and be out there, enough people will see you and say, you know what? They're on to something. I'd like to be a part of it. When those people congregate with other people and they spend time with their family and their friends, and if you got them and you were able to go ahead and get through them, they share with those. So our next leg of growth for RHINO is going to be a super duper duper partnership program. Now, we already have one, but we're going to really pour gasoline on that, because what I have noticed, and I know I'm not talking RHINO Wealth at the moment, but I'm taking the platform to talk a couple of minutes about RHINO, right? So what I have noticed over the last week is our organic membership is decelerating. It's still growing, but at one point where it was 20%, it's now close to like 1 or 2%, which means organically, we're kind of getting to a point where we need to go ahead and identify, how do we simplify the message? How do we go ahead and activate those that are looking to be bigger partners? How do we go ahead and reach those that we have not already reached, right? So we have a couple of things, right? Like we have the search engine being built. In fact, I think it might be done. I'm speaking to Abigail 11 o'clock. We have a commercial that I was sitting with my family yesterday watching the Super Bowl. And I got to tell you, the commercials that we're on, it's like $7 million slots. You have a whole entire marketing team in charge of the whole brand of a company that spent months putting these commercials together. And I think ours is wildly better. And that's coming out in the middle of next month. We're going to be doing live events every single weekend in different towns across this whole country. There are things so much going forward that we need to go ahead and focus on. That then brings us back to the email this morning. When I said that this will be the last week that we're allowing registration, it was honest. We are not going to be doing these lives every single day. In fact, before we did this boot camp, which was a phenomenal idea, which was only supposed to be 1 week, which ended up being 6 weeks or maybe 7 weeks, I don't know. We did a Monday live, like we're doing right now. And we sent an email every morning with our latest research. And the belief is those that know us, and you have gotten a good opportunity to get to know me by now, that when I say, oh, this is 16 red and green, or this is 20 red and green, or oh my God, you've had the time spent with us and you know what that means. You have the time that you spent with us that you say, oh, Ant said this, well, I kind of believe him, or I know him, or I believe his research, or whatever. But that email becomes valuable. It's not just an email from a stranger. We got to know each other, and it allows me to go ahead and still give you the value while also asking you to allow me some of my time back, because we have bigger goals that we need to hit. So this week I'll be live every single day. Going forward, I'll be live only on Mondays, but the emails will still be every morning. In fact, it's actually kind of good for some of us, because those that were not able to attend every one of these meetings are like, hey, Ant, I want to go ahead and get in with the transactions. I want to know when you're doing your buys and sells. I want to know what you're looking at. But ever since you start doing the lives, you don't send that email in the morning. It's kind of dependent on being on the live. So for those people that find that these lives are difficult to make time for and or unable to be on them, you will receive an email at 10 a.m. every single morning with the list of all the red and greens, as well as my one paragraph of commentary, which by this point you'll say, okay, well, I know what to do with that. Whether I go ahead and copy what Anthony's doing or I use him as a tool of what's going forward, I can find value in that, which means that this time that we spend together, for those that took the opportunity to spend it, we'll get as much from it that, I hoped you would. So that's Anthony's, soliloquy. Is that what it's called? Anyway, so let's talk about the market. Now, so I was actually quite disappointed in myself, right? And what's so cool about this platform is the fact that I really am doing this live in front of everyone. And I really am still learning every day, despite how great our performance is. Our performance is 22 out of 26, which is really, really good, right? Like that's, I don't know, 80, 85%, something like that. When in reality, if you're just 51%, you're good, right? You just want to win more times than you're not. If you're winning it over 80%, you're kind of in the Hall of Fame, right? But what does being over 80% mean? It means you're still under 100%, or else I would say you're 100%, which means there is a percentage there where you're prone to make a mistake. Now, the most difficult part about making a mistake is knowing that you're making a mistake, knowing that you're emotionally omnipotent to the logic that you already know. We sat here Thursday and said, and when we took off 40% profit on Twitter, said, we hope the market starts up tomorrow, being Friday morning, because we want to take a short position in the market. We see that the volatility is curving up, the volume's curving down, and the price is curving down. That we believe near term there's going to be a pullback, and we want to go ahead and take a short position, and we hope that Friday starts up higher. Cool. Okay. So all the reasons we were able to identify it were the reasons it happened. We did get a pullback, but it happened Thursday. Thursday, the market pulled back 500 points. So what did Anthony do? I'm sorry, I'm like trying to crack my back. I ate so much food last night that the weight that I added is actually making my bones uncomfortable because they're not used to holding this much weight. And that's a true story. Quite embarrassing, but hey, we're a family at this point. So we went ahead and purchased some Twitter Thursday, right before the market closed. And we said, and we even posted in the group, that the NASDAQ was right on that trend line, that we believed that Friday would be a bounce higher and we'd be able to get out of it quite quickly. And if it didn't bounce, we were okay owning Twitter because we like Twitter for all the reasons we shared last week. Okay. Do you hear what's so wrong with that sentence? And that's the point. I'm so good at convincing myself that by definition, you're likely going to be convinced that, well, there is so many wrong with that sentence, so much that we are playing for a bounce, right? So we're just trading at this point, but it's a defined risk. If it goes ahead and bounces, good. But what's the other side of it? If it doesn't bounce, sell. It's a one or the other. It's a binary transaction. If it holds this line, cool. If it doesn't, then what? it's going to go down. But we put such a small position in it because we understand ourselves well enough to know that we were going to be emotionally invested into it. So we took precautions. We did a very small position. We did it a month out instead of a day out or instead of a week out, because if we were wrong, we did want to hold the position. Okay. So we were wrong, and the market was down on the 500 on Friday. Okay. I believe Friday morning we showed a trend line of Twitter and showed that as long as it stayed over that line, we were fine. What happened? It cracked that line and sliced through it like a hot knife through butter. What did we do? Do you think we sold it when it broke that line? No, we didn't. What should we have done? We should have got into our time machine, went back to Thursday and said, if this market starts up Friday, we'll take a short position. Because that was the correct thing to do. In lieu of the market starting up Friday, we believe that we were so smart that because it pulled back Thursday, that was the pullback. Therefore, we'd be able to tactically trade it. And by tactically trading, we identified a trend line. And we said, if it bounces, great. And if it doesn't, we'll get out. And not only did we not get out, we bought more. And then it broke another trend line and we broke more. So what really happened? We were correct. We believe this market's going to pull back. And in believing the market's going to pull back, we've identified a point that if that presents itself, we're going to take advantage of it. Now, that point did not present itself, and we also didn't allow it to present itself because the market pulled back beforehand. And we thought we were so smart that, wow, you know what? We're not going to let this happen again. It's pulling back now. Let's get ahead of this. Well, what's the other argument? Well, Ant, maybe the pullback's a little bit more than you thought. And because it's more than you thought, it happened sooner than you thought. Is that a possibility? Yes. But did we even think that was a possibility? Did we even allow that to come to our mind? No, because we've been right so many times. This is what the market does. This is how it humbles you. You think you're right so many times. You've been right so many times. The market says, oh yeah, boom, take that. Now, in understanding our own limitations, we put circuit breakers on. We do small positions. We buy little more, so that if we're wrong, we constantly have more powder, right? Like more dry powder, more money. When we're wrong, we're not still buying the 40s. We started buying the 38s. Okay. Well, now it doesn't need to get so far. It can get to 30. So we're still buying a whole month out. We have a month's worth of time. We're buying lower strikes and still going down. Well, last we checked, I believe our account was worth 23,500, with 15,000 being in, or 15 or 16,000 being in Twitter stock, with 7,000 to 8,000 being in cash. Meaning 66% of our portfolio was in these options that are out for a month, while 33% was still in cash. Now, what does that cash mean? Why didn't we put that cash in? Well, because the belief is if we're wrong, which clearly we're wrong, we're getting beat up on timing, that we still have money, that we can still buy more. Why did we buy Twitter? Because the company's buying Twitter. They have $4 billion approved to buy their own stock, with $2 billion accelerated. All the valuations that we did ourselves show that it's a good value. It's actually cheaper than everything out there. It's growing, it's profitable, and the company wants to buy its own stock, and they have large shareholders, and they're in an industry that they're woefully underperforming, which gives them a clear glide path with the new CEO at the helm. All the reasons we liked it, we still like it. And we said, if it goes lower, we like it even more. What's the problem? Two things. One, we're buying options. We're not buying stock, which means we have a time. Which means if the market decides to tank for the next month, it doesn't matter how good the company's stock's going to come down. So we could have been right about the company, but wrong about the instrument we use. And then secondly, do you hear the volatility in my voice? Do you hear how disappointed I am in myself? Do you know what I want to do with Twitter? And I'm going to say this, and I don't actually mean it, but the people that are hearing it are going to understand it, right? So when I say the sentence, I want to take my computer and throw it out window, it actually is an indicator, right? So we've been together, and those that are new, welcome. But those that have been with us, we've been together for so long that we know that, like, when Anthony actually involuntarily just says he wants to throw his computer out, it's a bottom. Like, it can't get worse. Like, he's stuck through it the whole way through. He's out of ideas. He's ripping his hair out. If he sells here, he's selling purely on emotion. And every single time that we've said that, the market has bounced up. And it's not because I'm like a Nostradamus or I'm like a voodoo doll. No, I represent a class of investor that finds themselves to be quite experienced, right? Like I know what I'm doing, that I'm completely perplexed and overwhelmed, and I just want to get out of what I'm in. Which means, is that a reason to sell a stock? Because your feelings are so hurt and your ego so hurt that you don't even want to know they exist anymore. No. In fact, if you're selling for that reason, who's left to sell? Everyone that sold for a real reason already sold. And to prove it, you're selling for a reason that doesn't even exist. You're selling for a reason that's in your own brain, which means if you are an 80%er, right? Like you perform 80% of the time, which means you're kind of in the Hall of Fame, and you're selling for a reason that's completely made up in your own brain, there's no more reasons to sell. Now, the reason I said is I'm saying this, but I don't mean it, because I have to say it involuntary, right? Like I just said it to kind of paint a picture of the point I was trying to share. I don't really want to throw my computer out a window yet because I still have 33% to buy more, meaning I was in some deep deranged part of my brain that's sick, that wants me to feel pain because it's S&M related. I was hoping that this went lower so I could buy more. That's why I have money. It's still there to buy more. Now, if I'm able to do that and I'm able to buy more and the stock goes up from there, well, then I look like a complete hero, right? Like, yeah, I bought here and I bought here and I bought here and I still had money and I bought here and then boom. And that's likely what's going to happen. But I'm sharing this with you because we're on a live program. This is an educational platform. I want you to see what it actually looks like to be in this moment. I'm not interested in being cool, right? Like, oh, and when I watch him, he's cool as cucumber. He just never flinches. He's always right. No, that's called an edited video. There is no one in the entire world who is always right. And if you believe you know that person, you are a fool. See, we just learned something new, right? Now I'm like taken back because I'm calling people fools, right? Like we have our biggest show and I'm sitting here like calling people fools. Well, I didn't really call you a fool. If you match that criteria, you called yourself a fool. Anyway, Anthony, stop it. Okay. See, deranged. So what happened? Now I got to tell you something. First of all, glass water is delicious. And so it's expensive, right? In comparison to water. So I believe you could buy Poland spring water for like maybe $1.50, depending on if you go to Sam's Club. I don't know. Buy a big 24 pack for what, like $5, $7? This is a 6-pack for $12.99, right? Completely crazy. But it's only expensive relative to Poland Spring. Relative to the pleasure it gives me in drinking that, because I find it to be so much more delicious than regular water, is that worth an additional $5? Am I not worth $5 to myself, right? You have to start asking yourself, are you not worth it to yourself? And I believe I am, so I bought it, right? Anyway, so as I was taking a look at things over the weekend, because this whole Ukraine thing, right? So on Twitter, which is the news source, Ukraine's president invited our dementia-ridden president to their country and said, hey, we don't have a war. Like, I don't know why you guys keep telling everyone there's a war. Why don't you come and see for yourself? Do you know the only place that thinks there's a war between Russia and Ukraine is America? Now, like Churchill with Czechoslovakia, where he went to Czechoslovakia and said, hey guys, this guy Hitler, like he's really not messing around. He's going to come in here and kill all of you. And then we have to get involved and then it's just a mess. And, you know, we don't really want to. So you guys got to figure it out. These are his demands. You're likely going to be part of Germany. You can either do it smiling and get what you want to make it happen, or you can do it kicking and screaming and you're all going to die. And I'm sure Chamberlain said it a little bit nicer than that, right? Because he was really good at talking. And Czechoslovakia is like, okay, fine. Like, we get it, right? Like, we're part of Germany. Cool. That's kind of what's going to happen with Ukraine. And there's a thing in politics of saving face. And I don't, like, it's an election year. And I got to imagine people that are Democrats are just like losing their birds, right? Like, you just had a Super Bowl last night where everyone that's posted pictures of them wearing a mask was on camera not wearing a mask, right? You have, in California, you have a full stand, no one's wearing a mask. Why? Well, it wasn't cool to go to the Super Bowl and wear a mask. So apparently this pandemic, this virus is immune to coolness, right? Like, and it's immune. And I've always said it's immune to like money. If now, not the beginning of it when we didn't know what was happening and hospitals overrun and people passed away and died because of the virus and due to our response, not that. I'm talking about right now. If you get, I'm not getting into science. The point is, the whole Democratic platform is really falling apart in a lot of ways, one being COVID. So you would have to think with something like war, the president needs to save a little bit of face. Like, I've never seen a president just get bashed more than this guy, and deservingly so. But he's completely ill-equipped to do anything. Do we really think that on a phone call between President Biden and Putin, that Putin like got schooled by? I just don't see it happening. So the risk factor is, how does the Democratic Party try to save face on this? Because they've come out there and gave a lot of hard lines. If you do this, we will do this. Germany and Europe are like, guys, we're not losing natural gas all winter, right? Like, we have citizens. They rely on the pipeline from Russia. They supply our energy. We are not sitting in cold homes, freezing to death, so that America behind Joe Biden could look like they save face. So it's, I don't know, right? So there's a lot of variables. But what I think will likely happen is that the Democratic Party already knows there's no saving Biden. Let's just kind of throw him out with the bathwater. Let's just let him get these skid marks on his face. So I don't think there's going to be this giant war. I think they'll come out and say, hey, listen, and I'm sure they'll even give him a speech. Just like Chamberlain back in 1940s, I've seen the way. Chamberlain was really good. Biden's kind of the opposite. So if he can put himself in the same sentence with him, cool. So I just don't see that as a risk factor. And then coming into today, and all right, I'm blabbing, right? But the reason I say this was because the futures last night had the market down 300 this morning. And I woke up like, oh, this Twitter. I look at Twitter, it's like 35. And I'm like, oh, so frustrating. And I'm like, I don't even understand why this is happening. There's not an actual war. How are we going down on war rhetoric? So that gave me an opportunity to take a step back and say, Anthony, you're acting crazy emotional. The market's telling you something. The fact that you are wrong is because you're not listening. And this is where you'll always be wrong. When you think you can tell the market what to do. I'm sitting there reading Twitter all weekend, thinking that I'm telling the market what to do because I'm liking and retweeting photos and stories of us really not in war. And I'm thinking that by doing that, I'm going to change the market. It's because the assumption that I'm making is the market's going down due to war. What if we've always said it doesn't go down due to any storyline, it goes down to sellers. And then because the market's going down, it looks for a narrative to justify, to explain why it's going down. So if the market's going down due to a war that's not really existing, well then, do I think the market's so dumb that it doesn't know that? Or do I think I'm so dumb for assuming that the market believes that when the market's really going down for another reason altogether, and we're just saying it's war? Okay. So Anthony, chill out. Like, relax. You're looking like you want to throw a computer out a window. And that means you're getting to a point that's viable. Cool. So then as I'm driving in this morning, I hear that the futures are now up. They're up 60. And I'm like, you know what? Why do you do this to me? Market, why do you do this to me? Why did you make me have so much gray hair last night and now it's like everything's fine? Well, then James Bullard, Fed president of St. Louis, who last Thursday decided to say that he believes the market should have a 1% increase and blah, blah, blah. Fed should raise rates and all this other nonsense. And then the market came back down and it was down 60, the futures. And that's when it hit me. This guy came out and reiterated all this nonsense that brought the market down last week. And the market went down like 100 on it. It's still well higher than where it was at the depths of last night's futures. Are we getting to a point where all the selling is in, where everything's priced in? I don't know. But this is where we come full circle. I don't know where the market is right now, but I can tell you that if I take a look at this market and it's down 300-400, well, then the selling wasn't all in. And we got to really start taking a look at trend lines of what that January low was. But if this market is kind of like this and or up a little bit, then the Russia talk, the war talk was over all weekend and got cooled off this morning. And the biggest hawk for the whole Fed came out this morning on CNBC and reiterated what he said. If those two things, which are as bad as they could be, the whole reason the market narrative was going down and the market's not down, and we're buying more because we believe short term we hit our bottom. So we don't really know because I'm here with you. But I also want to always go ahead and make sure that I give an unbiased assessment. Because if I take a look at the market, then share what I just shared, I'm not perfect. I'm going to start telling a story based on the facts I already know. At least this way, we were able to say, if this is the case, this is why I believe this to be the case. If this is the case, this is why I believe this to be the case. And once you're able to identify two clear differentiated scenarios, you can then say, okay, let's see if it fits the narrative I came up with. Because if it did, then you know where you are. You're able to tactically move around because you have footing. If you don't know where you are, then you don't have footing. Well, the market's down. I don't know why it's down, but I'm going to buy. Why? Well, because it's down. It's going to go back up. Really? That's your reason? Because that's a really bad reason. So let's see where we are, right? And I'm really loving it. You know what's so funny? When you tell people it's a final thing, everyone comes out. And that's not a commentary on anyone in specific. It's commentary on us as humans. But we have the biggest showing right now because I put the word final in an email, which was completely true. Like, this is the final week. But like, for all those that are joining us today that did not join us, you should have been in this earlier. But I'm happy you're here, right? So let's go take a look at what's going on. Okay. La 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 la. All right. Let's move some things around. All right. Blah, 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 blah. All right, let's go to the market first. See where we're at. Oof. Down. What? How's that even possible? We're down 300 points in the Dow, but down 5 points in the Nasdaq. I gotta tell you something. That's the weirdest thing I've ever seen. And the Russell's up. What? And the VIX is up almost 10%. Okay, well, if the market's down 300, which, okay, let's go through it, right? We've always said the Dow is a reflection of international money flow. So for the Dow to be underperforming, it looks like people are selling Dow stocks. Now, when you're selling Dow stocks, is that international money flow coming out the Dow, or is that people that own the Dow selling the Dow? So you don't really know that. But what one could see is this becoming a source of funds? And the reason I say that is because when you have one index down 1%, and then you have the Nasdaq, which gotten beat up, down 0.1%, and you have the Russell actually plus 0.1%, is it conceivable that people are looking for more growth, saying that things have gotten a little bit too pessimistic, things in front of us are actually better than people expect, and when people realize that, they're going to say, we should have never been in all the super, super duper safe companies like United Health. We should have been reallocating our money to the more growth-oriented companies, the more economically sensitive companies that one would find in the beaten down Nasdaq and the beaten down Russell, which means if this is down and the market's like, oh my God, it's the end of the world, realistically, these should be down more. These are the sensitive ones. For these not to be down more, it's telling us that money's coming out of here and going into here. Now, you can never prove that, but whatever narrative you come up with that why the market's down over 300 points, can you take that narrative and say it only applies to the strongest companies, it doesn't apply to the weakest ones, that the weakest ones are immune to whatever pessimistic narrative you came up with? Okay, so whatever you're talking about, thinking in your head, is going to hurt Apple, Goldman Sachs, and Microsoft, but it's not going to hurt GoPro and Zoom Media, right? What this would say to me is that there is money flow coming from this and going to here. And if that's the case, we want to be in these, I'm pointing at it like it's like you could see me pointing. You want to be, and I did it again, you want to be in these two. All right, so let's see what's going on, right? Okay. Let's take a look at the QQQ. because we always take a look at the QQQ. Is this VXN? It is. All right. Okay. So what do we got going on here? All right. So we have that coming down. Now, what do we see? The market came down on lesser volume. So volume went down. Price went down, but volume went down. Now, it didn't go down by a lot. Still pretty high. But one could say that the selling, the pinnacle of it, had gotten exhausted because it did not more sell. Right? Like you see how the market went up here, but it went down, but a lower volume, less people were buying. As you see the market go down, it went down on really big volume, such big volume that you could say, well, this is going to get ugly. And it went down again the next day. What do we see now, though? We see the market down. But I got to tell you, look at this. Did it just go break even? It's positive, right? So let's say it's even, if not positive. Okay. One could say that this volume is going to be less than this volume. So it stopped going down and or is going up on volume coming down. So it stopped going down on lesser volume. Well, this gets a little tricky because if it goes up on lesser volume, well, and it went down on really big volume, but it's going up on lesser volume. That's not good. So what's better, to go down today, but go down on lesser volume? Yeah. So if it goes down, or if it's kind of break even, a little bit up, a little bit down on lesser volume, it means the selling's exhausted. If this bar goes higher than this bar where the volume explodes and this thing goes really high, then it's all clear, put all your money through it. It's a stock market, you're good. Okay. So we see volume coming down and we see, and it looks like it's going to be selling. So let's say sideways to down price action, definitely lower on volume. Where's volatility? Well, it's decelerating, right? So how do we show that? So let's make it parallel. So let's go back to, was it algebra? No, trigonometry. The angle of this acceleration is steeper than the angle of this acceleration, right? Therefore, the acceleration is decelerating. So if you have volatility decelerating, you have volume drying up, and you have selling, and you have price action becoming exhausted, what does that mean? Well, one could say, well, then we're kind of close to a near-term bottom. How long does it last? I don't know. But you could say that we're kind of getting close to that near-term bottom. Okay. So we want to be buyers. Let's go take a look at our super duper. Where's Twitter? Hey, Twitter's up. Thank God. I was really about to cry. Twitter was down as 35.50 today. So that would have been cool if we bought there. But again, we don't buy it the morning, partially because we couldn't share it with everyone, but also partially because it's kind of like people just do stuff. And we're not interested in the stuff that they do. But let's take a look at something. Look at the market. Chipotle's down. Facebook's down again. Facebook's back at 216. So actually, Facebook is interesting here. Because remember the low of this day was 216.15. Look at the low today, 216.71. Now, granted, we're on the low. But if this doesn't crack under 216, you could basically be buying Facebook at the double bottom. I got to tell you, that's kind of attracting me a little bit. So let's take a look at something. XLC. Because this is Facebook and Google. So the low Friday was 69.06. The low today is 69.16. I mean, Facebook's okay. Well, first let's talk about Twitter. Now, why are we in Twitter? Because we know the company's buying their own stock. Do I know that the company's buying the stock? I have no idea if the company's buying the stock. They didn't call me and say, hey, Ant, we're gonna go two bid 35.51 by 35.53, hit it hard large twice, right? Like they did not say that stuff. But you can see that people are, hey, listen, this is getting down. When's the company gonna get in? Maybe I should get in. You know why you can say that? Because this is up while all these other ones are down. It looks like people are jumping into Twitter first. And that's all we ever wanted. We want to be in a position that we could be in the stock that gets that first. But Twitter's now up 19 cents. Do we want to buy Twitter here? No. If I didn't own Twitter, I would. But is there a chance that Twitter then falls apart? Look at Lucid, by the way. Oh my God. Guys, I kind of want to buy some stuff. And let me say something about Facebook. I want to buy Facebook right now. I kind of think I might. No, you mo. Okay, so Facebook is an 8 red and green right now. Coming off a double bottom, basically. All right, so let's see. It's selling. Look at the volume going down. Ugh. All right, fine. Let's take a look at what Facebook closed. You know, Facebook, you're such a pain in my butt. All right. Yay, my stocks are down again today. Cool. All right. I gotta tell you, I'm not doing it. I want to buy more Twitter. I'm in Twitter. I like Twitter. All right, so let's see what we got here. So let's just add a little bit, right? Well, let's see. We have 38s there. Twitter's what, 36 right now. So let's see what the 37s go for, right? So let's buy 10 of them. Limit. No, I want 38s. Give me the stock. All right, we got some. Now, I don't like seeing this down 30%, which I'm going to buy some more. But the reason to buy more shouldn't be because you don't want to see the 30%. Let's see. Can we refresh the quote? Like, what are we doing here? Things are moving a little bit slower. Okay. So let's say I want to just buy 10, just to lower my cost a little bit, because I do want to get out of them profitably. Yeah, we'll just do 10. Seriously? All right, so those are it. Okay. I'm not going to get to Facebook just because I don't feel like owning 2 different stocks. And I believe in Twitter. So what happened, right? I still have 4,400 on the sidelines. I lowered my cost. So now I own the 40s at 110, and I own the 38s at 139. So let's go ahead and calculate our 40%, because the market owes us 40% on these. Now you'll also see I have 4,400 left on the sidelines, because if this continues to go down, I want to be in a position that I can continue taking advantage of it. But what do we see? We right now feel like an intermediate bottom's coming. So if the market goes ahead and does something stupid later, I want to be there. And if it doesn't, fine. I didn't spend all of my money. But I want to take advantage of when the market acts irrationally. Right now, we believe we have a bit of a footing. Let's go ahead and take advantage of it. So these are the 38s. We now own 60 of them at 139 times 1.4 means we want to sell 60. Still at 190. Okay, that's fine. Place order. All right, and let's see what the other order we have. So these are our 40s. We now own 130 of them. And we own that 110 times 1.4 equals 154. That's 150. Let's just take that off. So maybe we could sell a little bit sooner. All right. And we'll leave it alone. Hopefully it works. If it doesn't, Now take a look. We have 32 days to expiration. That's a long time. Now this position, we're only down 1% in. This position, we're down 28%. That's not fun. But if this stock jumps to 37, 38, because we have one good day, the market goes up 100, 200 points a day. Do you know this account will be wildly profitable? Do you know that we're in a position that we're down 18%, right? Our account's down 18% from the highs. We're still well over where we started. We have 4,400 sitting in cash. We're bought a stock that we believe is at a low with a market that's losing steam on the downside, where you have the NASDAQ actually up on the day. I'm okay with that. I can live comfortably with that. And what I'm even more comfortable knowing is, let me just take this off. What I'm even more comfortable knowing is that with the reason the market went down, the St. Louis Fed President James Bullard coming out and reiterating everything that he said that brought the market down. Look, there he is, right? Like, look at that doofus. Reiterating everything that brought it down, and the market's fighting back. And Ukraine and Russia's been in the news all weekend. I saw on Twitter today, Ukraine is saying that they still want to be in NATO, which is the whole reason to go to war, because Russia's like, we don't want them in NATO because then, we have to fight everyone. But let's just get them while they're not in NATO, right? All of that happened. And the market's holding in. So is this the calm before the storm? Does it whoosh down again? I don't think so. I don't see the volume to indicate that. But does that mean I know everything? I don't. I believe right now, one can buy something and feel quite comfortable that they did. Twitter is one that we are going to stick with because we know that the company is buying its own stock. We know that other companies should be buying Twitter. We know that we are very comfortable with where they are. And we have 32 days. Do I think in 32 days, Twitter's not going to get over 40? Zero chance. Is that a guarantee? No. It means that I am delusional enough to believe to myself that I do not think that they don't get under $40. Okay, so I'm going to stop that share. Let's see where we are. Yeah, totally cool, Mike. I think I had a chat. Okay, so that's that. Thank you for making me laugh. I feel deranged too. Karen! Love you. Okay, anyway, so let's see what's going on. Guys, I think I'm going to leave it there. We kind of touched on everything. So again, we, as you see, are down 18% since the highs. But actually, you know what? Let me show you one more thing. I want to do one more thing. Because I do want to show you something. Okay. All right. So now when people ask the question or want to know, hey, Ant, what makes you choose whether you're going to buy an option a week or 2 weeks out, an option a month out, or an option 2 months out? It simply is based on me being able to calculate the catalyst. This particular situation, we did not have a catalyst in front of us that could be in the newspaper, right? The company buying their own stock is a catalyst to own it, but it does not guide you on duration. It does not tell you that this company is going to buy $2 billion worth of stock by the end of this week. Because if that's the case, then that's a big catalyst. All right, let me get in it. They're buying it right now. But the company buying the stock in an accelerated pace means that maybe this week, maybe next week, maybe this month. So that duration risk gives me a month, meaning that if the stock gets down enough, people will then realize in their brains, wait a second, the stock is down a lot. The company already approved that they're going to buy the stock. I bet you the company starts buying it now. Let's get in before they do. So that allows me a month. The point being, we have purchased stocks or options that expire the week of. We have purchased options that expire within 2 weeks. The reason we didn't do it with this was because we could not manage the catalyst event. Now, why am I saying that? Okay. So this week, February's expire, right? So, okay, so last week, Twitter reported, we made our 40% really quickly. Twitter came back down. Somebody could say, and I actually thought this to myself, all right, well, I have another bite at the apple. Let me buy it here, and I'll buy options that expire next week because I'm so smart, it's going to happen right now. that's where you would have been wrong. Because what would have happened if we bought $40 calls that expire this week? Well, let's find out. No, you mo. That was my fault. Hold on. Okay. Huh. So as you can see, this is the date they reported earnings, right? There was a pop because they were announcing that they're doing a buyback. In fact, this is where we sold it. This is probably Thursday, right? Yeah. Okay. All right. And you bought it back there. Cool. And it came down at the end of the day. You said you bought your position back, right? Okay, cool. This is what, 70 cents? Don't let this line fool you. Do you see what that is right now? That's 9 cents. 70 cents to 9 cents. I'm not that good at math, but that's like 90% loss. Do you know what's going to happen every day of this week that Twitter does not go up? This might be 1 cent by tomorrow. The point being, you can take the actions and you bought it, you made 40%, it came down, you bought it back. And you've since bought it back a couple of times since it's been down. All fact. Where the expertise comes in, where the experience comes in, where the risk management comes in is what is it that you're buying? Because you could have been a super duper silly goose and bought this and you'd be down 90%. Do you know how silly I would look if I was showing you a portfolio down 90% right now? No, because I was unable to manage the catalyst effect in terms of duration. I said, I believe at least giving me a month time, I'll figure it out. Something will happen this month because the market's down so much since January and February. Is it going to be down a whole nother month too, or do we have a bounce? Let me take a look at the volume. Let me take a look at the volatility. What is the event? It's the Fed event that's in March. We bought options that expire after that event, so the event will already be out of it. Bullet already said the bad thing. There's not really a war, which means it can't be any worse than it could be, which means if the volume comes down, it's a level of exhaustion because all known is already priced in. I want a month's time because I figure a month's time. First of all, I'm psychotic. You just saw what I did there, right? But I can tell you the worst thing in the world. I could come up to you and say, hey, listen, you look really fat in that shirt. And you're like, whoa, that was rude. I hate you, Anthony. Tomorrow. Don't think I forgot what you said. I hate you, Anthony. A week from now. Yeah, that was kind of funny. But do you remember when you called me fat last week? I hate you, Anthony. A month from now. All right. And you're probably, it was stupid. You were having a bad day. Fine. The point being that month was long enough to cure how it was rude what I said, but I didn't go ahead and kill your cat, right? Like everything in perspective. The point being, all of the things that we have seen that we believe is, now again, we don't know what we don't know, right? Like something could happen that we just don't know. But all the things that we've seen that have been driving the car of this thing called the market, we believe have gotten to a point that with that proper 1 month of duration, how important that it is any longer would have dissipated. And if that dissipation was in a vacuum that was not filled by something else that was going to be cataclysmic, then the natural path is then up. And the reason we believe that is because we see companies buying their own stock. Again, this isn't a narrative where Anthony's just like, well, let me come up with something. Every little piece has to fit together. It's like being in the behavioral analysis unit of Criminal Minds, which my wife and I love watching that. Everything is a new data point. All right, companies are buying their own stock. All right, money managers are clearly saying you wouldn't put it into government bonds, you're buying the stock. Therefore, if we dissipate the bad news and nothing fills that void with other bad news, then conceivably that's going to be a moment of lull, and the other companies are going to be buying their own stock, which is the marginal difference, which means all the people that have money on the sidelines is going to come in because they're going to chase price action. That's why I bought a month out. Now, can I be wrong? Yeah, of course I could be wrong. But that's my calculus. And the point is, when you have a calculus, you can take a look at it and say, okay, like we can look at you know what? Let's do that real quick. Okay. First, let's take a look at the QQQ. We're going to buy right here because if it bounces, will do good. But if it breaks this line, it's going to get ugly. Look at that. That's one bar. All right. But we like Twitter. But if Twitter breaks this line, it's going to get ugly. Like, do you think I made these lines up? And now we're underneath it. Well, we want to get over it. And look, Twitter's at the highs of the day. We want to get back over it. You know, it'd be great if this volume bar is higher than this volume bar. Because if this, and actually, you know, it's kind of cool. Let me show you something. I didn't even see this, but I see it now. See this QQQ? This is the volume Thursday. This is the volume Friday on a down day, right? Look at the difference in volume. They're kind of close, right? Like you could say that this volume is almost as high as that volume. Well, Twitter trades in the NASDAQ. Look at this bar and look at that bar. What does that tell you? The magnitude's still the same. Look how much it went down. But what does that tell you? That either that there's just less sellers, right? Now, you can't go ahead and say that there's buyers yet, because buyers, to go ahead and see the more buyers come in, you'd have to see the volume increase. All right, there's less sellers, but there's more buyers. Okay, well, where's the buyers? No, this just is half a bar. This shows that there's less people transacting in it. There's less people looking to sell it. Well, why is there less people looking to sell it than there's people looking to sell the actual market? Is it because people are saying, well, why would I sell here? The company's buying their own stock. Why would I sell it? I'm not doing that. I'm not selling the company the stock at this price. They're going to have to bid this up. So what would be really super cool is if we see this stock go up and one of these bars get larger. If this bar ends the day higher than this bar and this stock is up, whoa, Nelly. All right, that's it for today. It's 10:57. The market isn't, Facebook, we talked at what, 216.71. We were right there. It's now 218.40. The market looks like it's trending, it's treading. It could either go one of two ways. We believe it's going to go up. We believe it's going to at least stop going down. That is our belief. We are not 100%, well, never 100%, but we're not even 80% in that belief. This could take a next leg down because right now there's a battle. The bulls and bears, the buyers and sellers, and they're staying like this. And what you want to see is them stay like this and then kind of pull up, because then the bulls are wearing, the buyers are winning. But we don't see that yet. We just see a battle and the sellers they're in it. So let's see what happens today. If we can get out of the day even, if not up, on lower volume with lower volatility, that'd be a total home run. So guys, that's our presentation for today. It's 10:58. Let me just see what everyone wrote. Thank you for making that. Gotta go. Oh, I have chats. Hold on. Q&As. Are you considering things like Truth Social coming online January 21st? No, that's February. So Jean-Pierre, actually, it's really funny that he mentioned that. So there's a stock. It's DWAC, DWAC. It's a company that is backed by President Trump that is called Truth Social. It's a social media platform to go ahead and take people from the Twitters and the YouTubes and the Facebooks of the world. We believe that Trump is super promotional and that that's going to be enough to boost it higher. That being said, we did hear rumors that there were delays in it coming out February 21st. And when I go ahead and think a little bit more of it, I think President Trump's aspirations are larger than a social media company. Therefore, if he was going to direct his highest ability of influential power, I don't think he would do it on this. I don't think he would risk presidential aspirations or political aspirations by using all of his capital in a stock where people can easily come out and say, look, he is a conniving billionaire. He owns a stock and he made billions. Trump fans are so stupid. Look what happened. I don't think he would allow that. So my wife and I have been looking at the stock to buy it, but the reason we haven't mentioned it is because we don't fully believe the thesis. Not to say that it's wrong. God bless if you're in it. I mean, it was 20, it went to 100 and something. It's now, I think, 70 or 80. I just don't think we're going to do it, nor would I even mention it. But since you mentioned it, I'm answering a question. So that's my 2 cents. I mean, won't that affect? So I don't think any new startup is going to go ahead and affect Twitter in such a way that their business degenerates. I think if you're on Twitter, you're comfortable with Twitter. If you're not on Twitter, you're not on Twitter. I think that there's so many different social media platforms that if you don't want to be on Twitter, it's not going to be because Trump came out with something. It's going to be because you've since moved. All right, it is 11 o'clock. So I'm going to run, and I'll see everyone tomorrow at 10. Bye, guys. And happy Valentine's Day. Every one of you, go home and kiss your significant other, because when I get home, oh, baby. All right, love you guys. Bye.